found you when your heart was broke. I filled your cup until it overflowed. Took it so far just to keep you close. I was afraid to leave you on your own. I said I'd catch you if you fall, and if they laugh then screw 'em all. And then I got you off your knees, got you right back on your feet, just so you could take advantage of me. Tell me how's it feel sitting out there, feeling so hard but too far away to hold me. You know I'm the one who put you out there, name in the sky. Does it ever get lonely thinking you could leave without me?
My, oh my, oh my. We have Vechain back in the Mango Grove. Just when I thought things couldn't get any better, Vechain showed up. The day just got better, guys. The day just got better. Good morning, good morning, good morning indeed. I'm back indeed, Sam. I am back. How's it going? How's it going, guys? It's been a while. Alright, come on, guys. Don't start the altcoin spam. How about how's it going, Mango? How's it going, Sean? Happy goddamn New Year. I hope you guys had a good Christmas. I hope Santa gave you a lot of toys, because you were such a good boy last year. You didn't buy any of those NFTs. You didn't buy any of those shit coins. You were a good boy. You deserve toys. None of that from you guys. Instead, I get Link, please. Matic, please. Vechain, please. Ada, please. God damn. Hey Candice, how's it going? By the way, Vishal, welcome Candice to the Mango Seed program. She's one of our new seedlings. Oh, is the audio a bit low? Or is the music too loud? Oh, the music's too loud. My bad. But it is the introduction, so the music's supposed to be loud. Happy New Year, Martin. Happy New Year. I think we can wait for a bit longer for Sherwin to show up, and I'm not sure if Mark shows up, and who cares if he does either way. He's just automated somewhere in the corner doing his thing. Oh, there he is, Sherwin. How's it going, buddy? Now all we have to wait for is Julian. He's likely to show up as well. Those are the regulars. Who else will show up? I'm forgetting names. It's been so long. How long has it been since we've done a stream? At least a month? I'm not sure. Happy New Year, Sam. It's been a year. Yes. The countdown is going, and it's ticked down 5 minutes a couple of times already, I bet. How long have you been streaming? Oh, not too long. Alright, I think we can go ahead and kind of soft start before we hard start. And with that, good morning, everyone. My name is Sean Dex, and I welcome you back to the Mango Grove on this beautiful brand new year 2022. Bitcoin starting off the year with a bang on a sale, right? But the sale is likely going to get a little bit better for all of you looking to accumulate more Bitcoin. I certainly am looking to accumulate more Bitcoin. We'll talk about potential targets for that sale price in today's stream, and we'll talk about a lot more as well. The Fed coming out with some scary comments, spooking the markets. The question is, will they follow through? And the question for many of you is, what does it all mean? Interest rates going up, interest rates going down, balance sheet roll off, etc., etc. What does all of that mean? We'll talk about all of that, and I'll be taking questions as well. In terms of doing actual analysis on the charts, there's not much to do, right? Because you guys pretty much know how to do all of it on your own by now, and I have also given you guys a three-step template as to what we're looking for on Bitcoin based on the yearly close. So we'll essentially be reviewing all of that and taking questions, right? I'm here more so to tell you guys to stick to the plan. That's it. Nothing much. How's it going, Raj? How's it going, bud? And Sachin is in here as well. Wow, it's gonna be a good stream. Oh, by the way, this isn't just water. It is a gin vodka soda. And believe it or not, guys, this is my first drink all goddamn year. All year. This is just sparkling water though. I'm celebrating today, man. I'm celebrating. So we'll wait a tad bit more before we begin. Shh, Sachin. I gotta make myself feel better. Yeah, same here, man. Water's so boring. I have like trays and trays of sparkling water at home. Hey, Jutrip, he says, yo, Sean, what is your Twitter account? Why is your Twitter account not available? What? My Twitter account is not available? You mean to purchase? You can't purchase my Twitter account. Not allowed. I don't use Twitter. I keep promising myself to use Twitter. I don't use it enough. But you can find me at Mango Sean, M-A-N-G-O, like a zero, Sean. Unless I got banned for not posting enough. Jack Dorsey wanted me to post a lot more. He's like, Sean, your thoughts are so profound, so deep. That's not my Twitter account, Kusha. It's a zero there, not an O. Is it? I just clicked it, it didn't work. That's some good analysis right there. 42,000 should be the bottom because Elon reached 69 million followers. Claudia is in here. How's it going, Claudia? She says, morning all, just made my partner take the kids to school so I can. Nice. Smart play. All right, so what should we start with today? What do you guys want to talk about? Okay. This is Bitcoin on the 1 hour time frame. Not looking so pretty, eh? Is the music too loud? Is the music too soft? Could you guys confirm all of that before we begin? Should be, yeah. Raja knows what's up. I'm gonna turn down the music a tad bit for myself so I can hear my own thoughts. Let me know if I turned it down way too much. I may have to increase it for you guys. Hey Kevin, how's it going, man? Looking forward to buying Bitcoin at 17K. Do we get that? Do we get that? What do you guys think? 17K? Do we bounce? Or somewhere in between? I don't know what the chat thinks. I'll give you guys my thoughts soon. But I want to know what you guys think. Sam says 35K. Not bad. Krisha says 35K bounce. Okay, Sam, do you think we reverse from 35K, or are you going with Krisha's hedging statement where she says we bounce there, but she's not committing to a reversal on 35K? And that's key, by the way, guys. As traders, you guys need to be able to differentiate those ideas immediately, right? There's a difference between trading a bounce, expecting a bounce, and expecting a reversal. If you're expecting a bounce, you got to be taking those profits on the bounce because the reversal may not be part of your thesis. Music's too loud, Thunder. Shurjo Dasgupta says 22,000. Marin says 22,000 as well. May I ask, where'd you guys get 22,000 particularly from? Now, I do have a couple of things lining up with around those numbers as well, but I want to know where you guys got that from. Marin and Shurja Dasgupta. Okay, so Sam, you don't think that we actually reverse from there? Sherwin says, Sailor sitting at $37,000. Pike a big fat yellow Mrs. Pac-Man eating all the big Bitcoins. Sherwin, I'll give you a big piece of advice. And this is coming from a Sailor fan as well. During the bear moves, your best bet is to just completely take Sailor out of the picture completely, right? It will help you trade with a clear head. It's hard to explain why until you actually go through the pain. I fortunately haven't dealt with that, but read stories on people getting punished. So Sailor's average price has come all the way up to $37,000. That's ridiculous. Oh, that's the weekly 200 exponential, eh? Interesting. Okay, I haven't taken a look at the exponential, interestingly enough. I'm keeping an eye on this, though. The Wolvie horizontal, I'm going to call it. If Wolvie's here, he knows what I'm talking about. Wolvie, one of our honored Mongolians and seedlings, has been waiting for a retest of $19,000 ever since we broke $19,000 right over here. So he may finally get it. So this is the 200 moving average, right? The exponential is also a key level to be looking out for, though. So you guys can see that we tested it right over here, right? The first test, and then didn't get a test all the way since the only test that we got since then was the COVID test right over here, and yeah, this is a key level, but that's interesting, actually. That's interesting. Do we simply go sideways long enough for the 200 moving average to actually catch up to the exponential like we did last time? right? That's probably what happened last time, right? Let me pull up BLX. Huh. So no. Hold up. So that was wrong. That was wrong. There wasn't enough data. So the last time that we dumped, or rather had a similar market conditions, and we dumped into the 200 exponential moving average, you guys can see that we didn't hold it. Marin, we didn't hold it, right? And then you can see on the COVID dump too, we didn't hold it. We didn't hold it. So maybe it's a 200 moving average that is a safer bet. Thoughts? Martin says, using Wyckoff accumulation pattern, this is a retest around the bottom. If it goes below 41,300, it looks really bad. So since Raja is in here today, Raja, do you see now why I stray away from using Wyckoff? There's so many different interpretations of when the accumulation is coming off its spring pattern or its bounce pattern, etc., right? It's hard to be objective with Wyckoff, right? You're going to see now Martin also calling this accumulation, and he's saying that we are in the midst of it, right? You had a different interpretation of it. Now, there's no right or wrong way of doing it. It's just really hard to come down to a conclusive call. In hindsight, it all looks, oh man, that was so simple. It was classic Wyckoff, right? But it's only after you go through those invalidations and you get market experience that you begin to see that, wait a minute, there was a classic Wyckoff happening right in front of me, but it didn't play out. But the term Wyckoff and its complexity and the entire schematic leads people to believe that because it's so complex and it's playing out so perfectly, this has to be a high probable trade, right? People often mistake complexity with certainty, right? Because it's so complex, there has to be more certainty attached to it. But that's not the case, and you're probably beginning to start seeing that, right? I want to know what your thoughts are, Raj. Raja is now saying, no, this is a redistribution, yeah, because the Wyckoff accumulation pattern failed, the schematic, but who knows, right? Who knows? I'm of course, you guys know what my thoughts are. Do you guys know what my thoughts are? How am I trading this? Those of you who have been following, right, Mango, I want you guys to tell me, how am I trading this? Like, lay it out in a couple of sentences. I've kept it very simple for myself. And it's very different from how Krisha is trading this, by the way. Like, this fits my personality a lot more, and also my skills a lot more, right? You got to match your trading personality also with your skills, or if your trading personality is not met up to your skills yet, or rather your skills have not met up to your personality yet, you need to get there. And you need to be patient until you get there, which is why I tell people, be patient, be patient. And this goes back to our conversation that we had with Stan in the seed program. Dipesh, how's it going, my man? Good morning, good morning, good morning, good morning, and Happy New Year to you, buddy. If you compare this pattern to the sun, I have literally not engaged with any debates with anyone since 2018 on. You have no idea how many pros, like literal pros, have in like private chat groups, they've gone head to head with each other on this Wyckoff distribution accumulation since 2018. I've seen over and over again, and I've never engaged in any of that, because the way I see it is that, man, it's too complex for me to have a clear, objective way to manage my risk. So it's useless for me, right? It's useless for me. I'm not trying to be right as a trader. I'm not trying to be right. I'm just trying to make money. So what I see is a lot of people who get into these Wyckoff distribution accumulation engagements and the debates, they are more concerned with being right than trying to make money, right? Because if you are actually trying to make money, there's simpler ways to do it in this market. But if you're trying to be right, more than trying to make money, then yeah, things like Wyckoff and Gaussian distribution and patterns and Gaussian curves and I'm going to stay away from certain terms. You guys know what I'm talking about though. I get so much shit though from the fanboys. Vishal says, based on the number of likes, 33 out of 98, I'm expecting Bitcoin. Oh, guys, you gotta hit the like button, or Bitcoin's gonna dump another 33%. But wait, Vishal, if the likes hit a ratio of 100%, are we gonna dump 100% more? What does that take us to? No, don't hit the like button, guys. I'm gonna become poor. Don't do it. Oh my god, not again. I've lived these days, man. I've lived these days over here. I don't want to go back to those days. Jesus Christ. So Roger says it's a redistribution because there isn't enough buying volume on the retest or spring of the lows. You know what you guys should consider? That it could be accumulation on one time frame while being redistribution on another time frame, right? Different traders trading different time frames could all be right on whether it's distribution or accumulation. Let me see if I can think about how to portray this with the current price action. Is it even possible? I mean, you go down to super low time frames. Like you could find a accumulation and distribution amongst the 15-minute traders, right? Who are accumulating a position, trade it to the Kijun over here, right? And take their profits. And that was an accumulation pattern where they traded in and out and they're out. Now they're looking for the next opportunity. Whilst on the low time frame, all of that is still, or rather the higher time frame compared to the 15-minute, all of that is still distribution, right? So it was accumulation for the 15-minute traders, but for the 4-hour traders, it's still going to be distribution until we go lower, right? You could do the same thing over here too. So understand the context under which you are trading, right? Because someone else may be looking at a higher time frame with a longer length of price action, and he's looking at it as accumulation still, right? But you may have already been invalidated on your trade idea, on your thesis. And if you are, you got to get out. You can't say, hey, wait a minute, Martin is saying that we are still accumulating. It doesn't matter. It doesn't matter. You were wrong, which is why we talk about we need objective ways to know we are invalidated, right? It's a very, very objective way. It could be a wick low. It could be a horizontal. In that case, it doesn't matter whether it is accumulation or distribution. You're wrong. It's over. It's over. Get out and then find a new trade. It's not about being right, right? Everyone could be right and everyone could lose money. That's the funny. Bitcoin has done that to people. Everyone in my chat groups were right and everyone lost money regardless. Execution trumps being correct. There was a video I did in 2018, I believe, where I talked about where I was wrong on just the execution bit. I was right on everything else, right? I was right on everything else. And I think the viewers back then too, who were following me, made money on everything I talked about leading up to the trade, and I didn't make money on it, right? The community made money on it. We were still on Telegram back then, as opposed to Discord. And I messed up on my execution. And that was a costly mistake, which is why I made a video on it, so I never forget. having to come out and talk to you guys about the mistake and laying it out for you guys. Because making videos is really difficult for me, especially back then. It was far more difficult. I'm an introvert, etc., etc. So because I had to do something so difficult for me, and then also talk about where I was wrong, etc., etc., it drilled it into my head forever. So today I'm in a position where those mistakes, when I get tempted to make them, I remember those days. I remember the pain I had to go through to simply make the video for you guys. So yeah, I've learned the hard way, guys. Sean, do you think there will be an all season like 2017? Man, 2017 was nuts. I think NFTs, the NFT craze, man, was the altcoin version of 2017's ICO craze, right? All season craze. Have you considered that, Raja? Are you how many of you are relying and hoping for an altcoin season? I'll tell you honestly, guys. Personally for me, it was when I stopped caring about making money on altcoins and saying I want to make money under any condition, that I was able to really start making money in this market. My biggest wins came on this break over here. Like I went on a tear. Like I was making money through these runs over here, but the big win came here. I was hoping for it, but now I don't expect anything. That's good. That's the point you reach, right? When you reach that point where you stop expecting anything and you're like, you know what? I got to extract money from the market regardless, right? Because it's very easy to look back at what other people gained. And that's such a trap, man. That is such a trap when you look back at what everybody else made in the market and you're like, I want to do that too. I want to make that money too. And then you start hoping for a reoccurrence of that, and you put yourself in that position that your friend put himself in. And time doesn't repeat, like history doesn't repeat. History rhymes, but it does not repeat, right? And you just go through so much pain because it doesn't just repeat one for one like that. Yeah. Mark, how's it going, buddy? You actually made it? That must have sucked hard for you. Did I miss something? Oh, are you talking about doing when I had to do the video, and talk about my losses, etc.? Yeah, that wasn't easy. Like today, coming on stream today was not easy for me either. It's a lot easier than doing this back in the day when I just started. But what I try to do is always I try to find the friction. I try to find the friction within myself. When I see there's a lot of friction between me knowing I should be doing something and wanting to do it, I push myself harder to go through that friction. Do you know what I mean? Do you guys know what I mean? I'm also referencing a book that Mark and I have both read, a fantasy book, Friction. Yes, exactly, man. Exactly, Mark. Yeah. Were you always a high time frame trader, or have you done? No, I was not always a high time frame trader, man. Not at all. I was scalp trading and trading the lower time frames well into 2019 actually. I'll tell you when I stopped doing it as much. I was scalp trading a lot during this period here. Oops. Right. when did I stop doing it as much? I think I stopped trading or rather scalp trading somewhere after the COVID dump. I just stopped, right? Because then the trend trades was just too easy. We started having better trend trading environment. But again, scalp trading, Raja, scalp trading and trading the lower time frames are two different things, eh? Two different things. You could scalp trade based on the higher time frames. So keep that in mind. I stopped trading the lower time frames like here. This is where I stopped trading the lower time frames after this period. I sound really sad. What do you... What? Is scalp trading an important skill to learn? No, it's not. It's not, because it's not a skill that is scalable into your old age. I consider myself old now, but believe me, man, I could be wrong on this. It could be just me, but it's just like gaming. It's just like gaming. Okay, you need to be on point, focused. You need to have quick reflexes to a point. Like let me put it this way. This is the best analogy I can give you guys who are also gamers. There's some of my old Dota replays. I used to play Dota as a professional, semi-professional at the very least, but I used to play it at a very, very high level, okay? When I watch some of my own replays of myself when I was younger, I look at myself doing things that I'm like, how was I doing that? I can't imagine myself calculate, notice everything I was noticing back then, seeing every little nuance back then, and be able to execute what I did in that battle, in that fight, because Dota is a game of 5v5, right? And it's hard, dude. You can't. It's a very, very, very difficult game, and there's so many things going on. And I was able to do things that I look back on, and I'm like, how did I do that? How did I do that? I won't be able to do that right now. And it's one of the reasons why I even got discouraged and I stopped playing Dota, because I'm like, I'm declining in how good I'm getting at the game, compared to how good I was, because I just can't process the amount of information anymore, right? Now, that's a different story compared to trading, but there's you can draw parallels. And when you're scalping, you need to be quick, you need to be focused, you need to be fast, you need to be, you can't have things going on at the back of your head, blah, blah, blah. And when you're younger, it's easier to do that. So you're just going to stop doing it as much as you start caring about other things, man. Dude, okay, so if you love Dota, I was watching one of my old games in a tournament where I was playing Tinker. Okay, and I was fully six slotted. With all activable items. Okay, I had sheep, I had everything, sheep, ewes, everything. This was back in the day when items were a lot different compared to what you are used to, and I was watching in the midst of a battle, like Sand King, Epicenter, Queen of Pain, Sonic Wave. This Kribelius had her spirits out. There's so much chaos. Earthshaker blinking in. Earthshaker blinked in, and in the second that he blinked in, I hexed him. I used somebody else. I did 3 things in a split second. I was like, holy shit! How did I do that? How did I even see that happen? Right? And it's the same thing with trading, man. Same thing with trading. So you gotta. So what happens with Dota? You're gonna notice that the older players start taking a more higher view position in the game, right? You're gonna see like Puppy, Kuroki, all of those guys. They're gonna become leaders as opposed to being executors anymore, right? They're gonna be like, okay, I'm gonna play a more support role. I'm gonna think about the big picture. I'm gonna think about the meta game. I'm gonna think about how everything comes together. Right? That's how you need to be thinking as a trader too. As you get more experience, use that to your advantage, and you start seeing things come together. Multi-time frame analysis is a similar story. That's why I'm able to use that to my advantage now. I'm able to look at multiple time frames and use that to my advantage, use that to my edge, as opposed to trading the low time frames. Yeah, you also feel a lot more exhausted after trading the lower time frames, Raja. That's a really good point. You have to make a far less executions when you're trading the high time. So for example, at the moment, I have a trade on that is based on the higher time frames because my contracts are only expiring towards the end of Feb, right? I told you guys about the trade in the seed chat. As long as Bitcoin moves, okay, in one direction or the other, I make money on my trade, right? That's it. That's all I have to do now. I have to just, I put on the trade, I have to wait a month. And at the moment, things are going good. I'm making money on the trade. But the way I constructed the trade is that, okay, you know what, Sean, you're going to make money in A, B, and C scenarios. All you have to do now is sit back. Now in the mid, this is the high time frames, right? Now in the mid time frames, I can take on trades, and on low time frames, I can take on trades as well to supplement that trade. But because I put on that mid time frame trade now, that ends up being my overarching strategy that allows me to be calm, right? And then I can start supplementing trades on top of that. Hey Philippe, how's it going, my man? Okay, man, we've been like talking for like 40 minutes now. We've not talked about any TA whatsoever. Are you guys enjoying this kind of stream? Because if you guys are, I'm really proud of you, proud of all of you as community members. And if so, hit the like button, man. Let me know you guys are enjoying this kind of stream. Because we've done no TA whatsoever. We've just talked about ideas, talked about mindset, talked about trading psychology. Lucas, how's it going? Philippe, how's it going? Nelson says, do we short? The time to short is long gone. Actually, who knows? Who knows? If you get a retest of around 45,000, I could see that being a good trade. Where's the 2-day 200 coming in at? 45,000. Who'd have thought? Who'd have thought? My future strategy. Have you watched my video on? Sorry, have you watched my video on funding rates? By the way, Raj. That video is essentially it covers multiple concepts. It ended up being a lot longer than I expected it to be. Okay, so in that video, I kind of explain how futures work, right? Like the expirations. Perpetuals are, in a way, the more complex instrument. So I guess people just use the perps without really caring about how they actually work. Because when I first started trading, I'm like, how do these things even work the way they do? Like perps are pretty impressive. You may have missed something cool, Steve. Firstly, welcome to the Mango Grove, Steve Agleron. I hope things are good in Spain. Philippe, I'm doing good, my man. I'm doing good. Thank you for asking. BTC price reversal from here. Maybe we bounce off this 200 exponential moving average. Okay, here's the thing, guys. Here's the thing. We do have support. Okay, we do have support. I do want to highlight to you guys that we finally completed the C-SPAN trade from the weekly Tenkin. right? We lost the weekly Tenkin, retested it, put in a sort of bear flag, and now we've come down to test the Kijun. Now, the weekly Kijun could be support, and I think it's likely going to be support because, and how many of you guys watched that video? I mean, I think all of you did. I know Philippe definitely did. We talked about this being the eventual test, right? Remember? Okay. Oh, man, do I need... These kind of segments end up sounding like I told you so, but we can go over it again. When we lost the 2-day dynamic, okay? I'm gonna go back to it. Philippe's like, I never missed on video, my man. So when it's the same thing, all happening again, but it's just a continuation of the same trade. We've not come out of that trade yet, okay? We've not come out of that trade yet, or rather that trade idea. It's still playing out. So remember when we lost the 2-day dynamic over here? I got bearish, right? And I was like, okay, listen, this is not looking good. Get ready for the capitulation trade. The capitulation trade, I kept putting in air quotes, towards the 2-day 200 moving average, which at the time was literally over here, okay? I'm drawing it out, something like this. I think it was like this, actually. Something like that, right? And we said, I will be looking to buy that trade. I'll be looking to buy that move towards the 200-day 200 moving average only as a range trade. So essentially, you could look at this, by the way, Raja, as a scalp trade, okay? You get the bounce, you take the profits immediately. That to me constitutes a scalp trade, and I'm using the higher time frames, right, to facilitate that scalp trade. But you could also look at it as reconstruct it as a range trade by doing your TA. I'm not going to go through all of it again, and find out key levels where you want to take out some profits. We said that we may use, after we take out profits, right, which is around 75% to 80%, because we weren't expecting continuation, we're going to leave some of it in case we do see continuation towards the upside. But we didn't see that, right? However, when we were constructing that trade idea, there was another level that we looked at. I really urge you guys to go back and watch that video because there's so much to learn from it. We talked about specifically the weekly Kijun and the top of the cloud, guys. Do you guys remember that? Specifically, we talked about this. We were like, the first test of the 2-day 200 moving average is likely going to lead to eventual retest, or rather eventually coming back down again and testing the Kijun, taking out those wick lows of the 2-day 200, and they're seeing all of that play out, okay? Now, if we did not have the current market conditions that we do, my mindset would be a lot more different and a lot more aggressive. But because we do have the current market conditions, I'm being a little bit more cautious. I'm not looking to short Bitcoin because of this, right? But at the same time, right, I want to put on a trade where I will make money in case we go down or if we go up, okay? Of course, you got to pay for that too, right? Nothing's free. When do I lose money? I lose money if we go sideways. So that's how I've constructed my trading strategy. If we go sideways, I lose money. So that's what we have over here. We could bounce off the weekly Kijun, maybe come up, or we could further move towards the downside. But so far, everything's going according to that higher time frame plan. And the reason we were able to come to that plan and not be panicked like the rest of the market over here is because we were looking at the higher time frames. I made that trade on spot. What trade are you talking about? Which video, name and date? You can't make that trade. Oh, if you're talking about the vol trade, you can't make that trade on spot, man. Hold up. Let me pull up the. Could someone link the Bitcoin video to Donimus? Oh, I think the name of the thumbnail Donimus is Bitcoin. This is where I am buying, right? The thumbnail says Bitcoin. This is where I will be buying. And I very, very, very rarely make bold claims like that. Very rarely, right? That should be another way for you guys to be able to filter out the good traders on YouTube and Twitter, etc., whatever you guys use, with the freaking garbage traders who are just bullshitting. If someone's making calls all the freaking time, you gotta really ask yourself, like, is this guy for real? Because the best traders I know very rarely have high conviction all the time. Like, they'll have high conviction very rarely, and they don't even put on trades that often. Was it a stream or a video? I think it was a stream. Or was it a video? You guys would know, man. I don't know. Don't remember. The one from the beginning of December. Yeah. He's talking about Raja's talking about the 2-day 200 moving average trade. You're almost at that level, Raja. You're almost at that level. I can tell. You've gone through the steps of learning your technical analysis, right? You know how to read the charts well. You know how to identify complex structures. Now, and two, you've gone through the pain of being humbled through the market, being overconfident, being humbled, and then learning all of that, right? We all go through that. We all get humbled. We all get overconfident. And then the next step is beginning to realize, okay, all I need now is the patience. All I need now is to take a step back, ignore all the bullshit, because this market is full of bullshit. A lot of people bullshit. You got to keep that bullshit out of your head, right? Because you're going to get tempted to jump into the trades that everyone is hyped up about, and you got to wait for your moment. You just got to wait for that one moment and just pounce. So you're almost there. I can tell. I need to stick to the higher time frames. Exactly. Hey Aaron, how's it going, man? I love you right back. Thank you, Sherman. Thank you for linking it. Appreciate it. I think Mark linked a video too. I'm not sure which one. So this time we've lost the 2-day 200 moving average, by the way. So it's not looking like the best picture. The thing is, we've not lost it yet. So I want to take a step back and acknowledge that if Bitcoin actually pulls off a bounce over here and closes the day in 14 hours, closes the day above 200, above 45,600, the 2-day 200 moving average, that's gonna look really good, because we would have defended the 2-day 200 moving average while giving us a test of the weekly Kijun. So that's gonna be impressive. Do we do that though? If we had a little bit more time, okay, if it was a brand new 2-day candle and we did this and we did not have the Fed speak that spooked out the entire market, where they are so determined of tightening within the next few months, leading into Krishna's birthday coincidentally, I would have said, okay, there's a chance that we actually bounce over here aggressively and then see a reversal. But considering what the entire market sentiment is at the moment, and if you look at yields, we can't ignore this, guys. We cannot ignore this. This is significant. Okay. If this keeps going, this is not, the markets are going to see some pain. You also have 30-year yields pushing high and aggressively. Like, this is a key level. I don't have it marked out over here, not clearly at the very least, but this is a key level right here that we just smashed through. Any questions on this, by the way? Because so essentially the way you need to look at the world, Raja, is, I'm going to try to simplify this as much as possible. Money flow dictates everything. Okay, inflows, outflows out of crypto, inflows, outflows into the equity markets. Okay, money flow dictates whether asset prices keep going up. Even the mortgage market, right? Even real estate. Money flow dictates whether asset prices keep going up or not. Now, what dictates money flow? Okay, how do investors decide whether to allocate money into one market or into another market, or to allocate money nowhere and say, I'm just going to keep my money in my hands, or I'm going to keep my money in US treasuries, which is considered the risk-free rate of the world, right? Essentially a risk-free asset, while still gaining some yield. How do they decide that? That's the big question. Where do I put my money? Should I put my money into anything? Now, if you are seeing that you can get yields, okay, you can get yields from a risk-free asset, okay, currently the 30 years are going for 2%, okay. If I see that, wait a minute, I'm getting 2% risk-free on US treasuries, that's going to make me think two times more about putting my money into Bitcoin versus if all I was getting was 1% yields on my risk-free asset, correct? Because now my yield on my risk-free asset has doubled all the way from 1% to 2%. You understand? At the end of the day, it's all about yield. That's what you care about too. That's what you care about as well. All you care about is gaining yield, gaining gains, right? All you care about is gains. So you are going to put your money where you can get the most with the least amount of risk, okay? So when US government treasuries start giving more yield, that is the risk-free benchmark for every asset to match up to, okay? So if I can get more yields on bonds suddenly, I'm going to be like, okay, wait a minute, I need to rebalance, because I can get risk adjust, I can get the same risk, I can get the same yield with better risk by just rebalancing my portfolio and putting some of these assets from my equities and my Bitcoin, etc., into the bond market, right? So money starts rebalancing based on the yield it's deriving from the market. That's the easiest way I can put it without getting into all of the nitty-gritty aspects of it. And Julian, we were talking about you at the beginning of the stream, my man. I love how you guys can see how the viewer count dropped from around 115 all the way down to 90, because we're talking about things that matter now, like the macro markets. But I don't care too much, because these things are important. Those of you who are looking to learn, pay attention to this. As yields start going up, right, you are less likely to allocate risk into equities, into Bitcoin, etc., because you can get that yield from your risk-free asset. Michael Ignacio says, Mango research is the most objective. That's precisely why we don't do too well on YouTube. Being objective is a losing strategy on YouTube. So if you guys look at the 10-year yields right now, Krishna was drawing something on her chart when I was at her office. I mean, she doesn't have a separate office room. She was drawing something like this. I'm not sure whether I'm going to be able to draw it. I'll try. Was it on the weekly? The daily? Krish, are you here? What were you drawing? Was it on the was here, right? On the daily. I can't add. But she had a symmetrical triangle of some sorts. Oh, what am I doing? It's here. I see it now. Yeah. There you go. Kind of lines up, eh? Oh, was it on the bi-weekly? I guess you could draw it on the weekly too, eh? You missed the daily 5-minute vids? What do you mean? We've never done daily 5-minute vids. To be successful on YouTube, all you need to do is show fancy charts and shout bull. Yeah, that's so true, Divya. That is so true. Mini dump happening right now, says Divya. Not really, man. This is looking bearish though. The structure over here is bearish, but it's testing the horizontals on the lower time frames at the moment. Like I said, man, the Mango Vine 12-hour has never failed, by the way. Literally, no. It's like, what, 99% success rate? Ridiculous. But, yeah. So, the 12-hour Vine flip bearish all the way over here. It's all, like, I told you guys, when flip bearish, I told you guys, I'm going to regret not taking a shot based on the 12-hour Vine. I told you guys I'm going to regret it. The Mango Vine is not available anymore. No, I'm not going to follow it next time either. I do follow it in a way, right? I don't long when the Mango Vine is red. As in, like, when it flips bearish, I don't long. So in a way, I do follow it. But I don't short when it just, the Mango Vine lining up with the rest of my trading strategies it happens so rarely, right? So it's so powerful, but I just can't bring myself to counter trade everything else that I'm seeing in a more conservative, or rather when I'm so conservative as a trader, right? I don't like, this is a different conversation. Debate says, I think we are entering a bear market officially after losing the 500 weekly moving average. Oh, sorry, the 50, not 550. That would be brutal if we lost the 500 weekly. Let's go take a look at that, man. You said 50, right? Wait, what did I? Okay, there we go. I mean, we lost it here, right? Did I do that right? So technically, we entered a bear market over here. Or are you looking for 2 candle closes? That's fair. If you're looking for 2 candle closes underneath, then we didn't lose it here. We didn't really lose it here. And we haven't officially lost it here, but we're likely going to lose it here. That's fair, man. That's fair. If you're looking for 2 candle closes. Let's see. Over here, when we actually lose it, we lost it here. So your bear market started... Yeah, that's fair. 7,000. That would be fair. So everyone can have their own guide as to when we are in a bear market, okay? Again, don't get sucked into those arguments, guys, where people are like, we are in a bear market. Right? You need to be stern and steadfast on when you are going to trade a bear market. For example, we were very, very adamant over here when there were so many YouTubers, not YouTubers, well, YouTubers as well, but so many people in our comments calling me an idiot, calling me stupid for taking a long off this level over here, right? Saying we're in a bear market. People actually accused me of being harmful to my community. Me, of all people, when I'm like one of the most conservative and I'm always like telling you guys to be safe, etc., etc. People accuse me of being unsafe and putting my community in a position of harm when I took a long over here. But I have my own conditions upon which I say, okay, we're going to be in a bear market, I'm going to short, etc., etc., right? So yeah, you need to have your own conditions, and if your conditions are the 50-week moving average, it is what it is. Let's talk about that though a bit more. Let's go and back test it a bit. It's a good guide. Why not? Lost it here, bear market. Gained it, lost it here, bear market. Lost it here, bear market. Lost it here, mini bear market. Fair. You can't disagree with the guy, right? It's a good guide. Hey Murli, you missed most of the stream, man. Divya Kumar Sharma says, Sean, not sure whether you have already discussed it in this session. Do you think due to interest rate hikes, will equities fall? We might see more retail traders in higher risk assets, cryptos. What? Sorry, I don't mean to... Wait, what's your reason? I want to know what your reasoning for that is. There could be... It could, but I want to know what your reasoning is. Thank you, Murli. Good to see you too, buddy. In chat format. Why would people put on more risk if they're de-risking from equities? Equities are considered risk on. Crypto is risk on as well. So there's no difference there in terms of the mindset. Happy New Year to you too, buddy. Bitcoin dominance. I told you what I tell you guys on Seed. Watch for Bitcoin dominance to start ticking up. That's while Bitcoin is going down, right? Watch for Bitcoin dominance to start ticking up while Bitcoin's going down. I trade all assets, but I see no reason to trade equities at the moment. I trade only crypto now at the moment, and I think for the foreseeable future, I'll let you guys know when I start trading more assets. I was trading Forex. I keep an eye on equities. I watch equities very, very closely. I just don't trade them because, dude, we are in a life-changing, a revolution that will be talked about 1,000 years in the future. Do you really want your limited focus to be looking at a different ball when this ball could bounce to the goddamn moon? Like, I don't know. I've made my decision on I don't want to be missing out on by far, and I'm a student of history. I spent almost all of last year studying history. Believe me when I tell you guys something special is happening right here. That is going. It's going to take like 15-20 years. This is a 15 to 20 year story. More, at least 15 to 20 years more. This is going to be. You don't feel it right now. You don't feel it right now because it's not fully played out. What's happening here is special. Big opportunity cost trading equities instead of crypto. Exactly. Well said, Julian. Yeah. It's easy to look at the new shining ball. That's another piece of advice I can give you guys. Try to stay away from the newest, shiniest red ball, right? Don't be the little baby in the cradle that is getting tempted to reach out for the shiny red ball that your aunt and uncle are putting over your head and trying to get you to reach out for it, right? And they take it away from you. And you're like, gaga, goo goo. Don't do that shit, right? Stick to your long-term 10-year goal. Don't be a goddamn baby. That's the same thing with NFTs, etc., guys. Unless you're the one holding the red ball, right? And you can actually take advantage of it. Know what your core competencies are and trade around it. Give me an X. Give me an R. Give me a P. Wow, I love this guy's enthusiasm. Crypto is going to change society in a way that you will probably not fully understand because you don't fully understand money yet, Raja. Most people don't understand how crypto is really going to change the world. Just like how most people did not understand how the internet was going to change the world. It just happened to the world and now we're all living in it, right? Think about how things are consumed today compared to how it was not even fathomable in just 1995. Okay, the way we consume content, the way we communicate with each other. Now think about that pertaining to money. Businesses, the way they're constructed, their business models, their pricing mechanisms, everything is going to change. Everything. And just like how companies like Blockbuster, etc., were far too slow to change their business model based on the new technology, companies who do not change their business model based on the new way money can be consumed and relayed are going to pay a heavy price, because that will change how people interact with business offerings. Oh, reading Bitcoin Standard is only like the tip of the iceberg. But I'm glad you started, man. Dude, Bitcoin Standard is not even a red pill book. You want to read a red pill book, read The Sovereign Individual. After that, read The Fourth Turning. Like the far better. Read this. Oh man, I could give you a list. Which book? Sovereign Individual? Did Sean give his guess on where BTC was going? I know Krisha thinks 35,000. That's kind of my thoughts too. But I wasn't clear if he's expecting a bounce off the Kijun on the weekly. I haven't, you guys know my thoughts based on what I discussed on the monthly, leading to the monthly close, right? I told you guys what I'm looking for. I literally laid it down in step format, right? But whether we get a bounce or not, are you trading that? Like, if we get a bounce, I won't be expecting. Okay. First, let's start with what let's do some TA. Let's do some actual TA, guys. Let's start with what we discussed towards the end of the stream, or rather end of the month. Look at Neo, please. Yeah, we'll look at Neo soon. Thank you for the 40 rubles. I'm not sure what it is. Okay, so we said if we close the monthly underneath the 10 SMA, well, we'll be looking towards this juncture over here, this entire support, bull market support band. We'll be looking towards the monthly bull market support band over here at 10 kin towards the Kijun. Okay, yeah, we'll be looking towards this zone over here, right? But now how we get there could be multiple ways. One of two ways is that we have a quick move down where we get picked up and we hold the 21 EMA and the 10 kin, right? The second way would be on the weekly, we actually put in something like this. Like, you almost don't want a bounce over here, guys. You almost want this to capitulate. I'm going to show you guys why. Because if we put in a consolidation, right? Let's say we bounce, put in a lower high, come down, put in a lower high, and then move down towards the end of the month. Well, at that point, guys, let's look at this drawing over here, okay? Look at this drawing over here. I'm going to switch to the monthly. At that point, it means that the monthly closes underneath the weekly 10 kin, the weekly 21 EMA, the weekly Kijun. When that happens, right, you have everyone coming in to put on shorts, me included, okay? I'm also going to be shorting Bitcoin at that point. And I'll be doing it following my rules. And at that point, you can bet that it's going to be a situation like this where everyone was bearish. Everyone was bearish. Bitcoin usually doesn't different story. But I was going to say Bitcoin usually doesn't spend too much time underneath the monthly 21 EMA in the context of the monthly time frame, right? Even over here, if you consider how long we spent underneath the monthly 21 EMA, it's only like 5 candles, albeit 5 months, but 5 candles, right, before you got to accumulate and have a huge rally again. Nonetheless, great shorting opportunities. So those are my thoughts. Do we hold the 21 EMA? And if we do we bounce back immediately, etc., etc., etc.? If we don't, then yeah, Krisha's numbers of 19K, 25,000, etc., etc. So decision points, guys. Decision points. Any questions on that? Let's go, Neo. I've been keeping an eye on you myself. As long as holding that, good. If it breaks this level here, $7, really, really bad. If it breaks into this range, just back in a range, no, nothing to worry about, but it could do something like this. And then put in a head and shoulders, right? Let me just redraw that for you guys. This could be very toppy if it breaks back into the range, okay? Comes back down, tests, attempts another attempt, fails to break out of the range again. But this is the weekly time frame. Let's see what the daily is doing. Selling off. Looking a bit weak here. But again, let's compare to Bitcoin. Let's see what it's doing compared to Bitcoin. Bitcoin is pushing it down. It's outperforming Bitcoin on the daily by a good margin. Great retest, great pickup. 12 hours looking good too. Holds this level over here, really good. If it loses this level on a 12 hour, likely going to come down, take out this wick. If it takes out that wick, likely going to come down and test this level over here, takes out this wick over here, likely going to come down, test these wicks over here, takes out these wicks all the way down here. So that's the step-by-step process. It could do something like this. If things go wrong. I mean, it's a bear market. I mean, it's a bearish market at the moment. Mango Research, what are your thoughts on recent Fed interview? Can they really tighten? That's a good question. Damn. Let me just switch to 10-year yields. So Krisha asks, can the Fed actually get away with tightening? And this is actually a really good question, because I think they can. Believe it or not, I know we've been saying otherwise, and that's true as well. They cannot tighten over the long run. They can tighten though in the interim. They can definitely posture one. By the way, the most recent FOMC meeting, in my opinion, is them posturing, because the statements were so strong and the sentiment was so clear that it made the market react, right? And this sits in line with what the Fed wants to do. They want, okay, you guys need to understand that the Fed needs to essentially, they have two mandates. They have to facilitate high employment, so they want to keep unemployment low, okay, while also keeping inflation expectations, okay, not inflation really, but inflation expectations, they want to keep that as low as possible, because inflation really runs hot based on people's expectations of inflation running hot. If people expect inflation to run hot, they lose faith in the currency. So what the Fed is mandated to do is to keep employment up. That's their primary concern, to keep all the people employed, working, earning money, because unemployment could lead to real depression, etc., etc. So they have to keep that up while also battling the other end of the band, which is inflation, right? So all of these statements, they know that people are going to read. They know that people are going to react. They know that people are going to take hedges against what they will do in the future, right? So if the markets actually come down, if inflation actually comes down, and they see now in a couple of months that, wait a minute, everything's fine. Everything's fine. Maybe we don't need to tighten, right? Then they won't tighten. The question is, can they tighten? Yes, they can tighten through multiple means. They can stop buying bonds, right? Because keep in mind, they are currently under the process of buying bonds every single month, okay? They have a fixed number of bonds that they've been buying. They've already reduced the amount of bond purchases that they do make every month. They can simply stop buying bonds. Now, that doesn't mean that they're being bearish and they're selling bonds, but it is less dovish than before, right? It is less dovish where they're simply buying and buying more. Another thing they can do is actually sell bonds. Okay, that is actually them reducing their balance sheet, and that's essentially what they're talking about when you read the balance sheet runoff. When they say runoff, they're talking about reducing assets, right? Because the Fed currently has a lot of assets on their balance sheet. Okay, they start selling assets. What are they doing, guys? They're essentially adding sell pressure onto the markets. They're removing liquidity from the markets, right? What they're also doing is they're reducing the collateral that existing institutions have in order to be able to take on their positions, right? So for example, let's say you have a margin account and your Bitcoin is worth $50,000 and you have one Bitcoin in your margin account. Well, your collateral is $50,000. But if Bitcoin actually drops in price and reduces to $25,000, well, your collateral has actually dropped down to $25,000 too, allowing you to essentially take a lower position, okay? How? Because let's say your Bitcoin was worth 50,000, you can take a one Bitcoin 1-to-1 ratio, or rather 1x position of $50,000, right? But now Bitcoin drops down to $25,000, you can take a 1x Bitcoin position of only $25,000, right? So your buying power has essentially reduced because your collateral, your underlying collateral has dropped down. Similar with treasuries, okay? When the bond market sinks, collateral decreases, right? People's collateral decrease, so they can't have as much buying power as before. So that also spooks out the market, a lot of rebalancing, etc., etc. What happens? Interest rates go up because bonds come down, then suddenly the mortgage markets get affected as well. There's a cascading effect throughout the market. So I don't think that we are going to see that before we first see the markets actually meet the Fed's intent of actually cooling off. They want inflation to cool off. That is definitely a concern right now. Okay, inflation is a concern for the board members of the Fed. So that's what they're trying to target right now. That is the biggest concern, because one of their mandates are already achieved, which is employment. Employment numbers are good, and they are on their way towards reaching the Fed's goals or target employment numbers. So that's a good sign, but now they got to target inflation. However, they can do that via simply posturing. If they are forced to actually sell, the markets will take a massive hit. Once the markets take a massive hit, they're going to stop selling. Okay, 2018 was a similar story. It's called the J. Powell pivot, where J. Powell tried to actually tighten the market, double tighten the market by essentially increasing rates and actually selling asset purchases, selling bonds into the market. He tried to double tighten, and the market took a big hit in 2018, right? So if they try that again and the markets go through the same thing again, they're going to have to do what they did again last time, which was start quantitative easing again, right? Which leads to what, guys? Leads to what? It leads to the dollar weakening over the long run either way, and overall in the long run, they cannot tighten too much. They cannot rates go up. They cannot allow for rates to go up too much. Why? Because the US government is massively in debt themselves. When you are in debt, what does that mean? You are paying interest rates, right? You are paying interest rates. So if they increase interest rates, they have to facilitate those same outgoing payments to people who hold those new bonds. So that is going to put the US under even more financial pressure, more than their current obligations, which are already freaking pretty high, considering the amount of boomers who are going into retirement. They have a lot of retirement obligations. They have a lot of Medicare obligations. The US government rather, is already under a lot of pressure, financial pressure. So the Fed is already under a lot of financial pressure, and it's a balancing act. It's a massive balancing act over here, which is why I've been telling you guys, make sure you have a 10-year horizon, because it's going to be topsy-turvy. This entire period, this next 10 years is going to be a roller coaster. And all you have to do is survive through it, because in the long run, they want to devalue the dollar. They have to devalue the dollar. That is their way out. The solution to America's problem right now, to the world's problem, right, is devaluation. Can you navigate the waters through the 10 years of devaluation is the question. That's all you have to do, guys. Okay, be mango. The mango philosophy is going to be the winning strategy for the next 10 years. I've not adopted the mango philosophy because not only because it's stress-free and it allows you to live a good life, etc. Mostly because it gives us the best financial path to success. That's all you guys have to do. Okay, don't miss out on this, man. The plan is laid out for us. The plan is laid out for us. History has shown that the way to the top, okay, the way to making money, how countries have made money, it has happened through multiple ways, right? Some massive empires have reached success through being a military power. For example, Sparta, right? We've all watched 300. They were a military power. Some countries have reached their economic success, or rather their first, or rather rising power success through trading, right? Through trading. Like China is a great example of that. So there are multiple ways to actually get to the top, but there's only one way to get out of the trouble that they all inevitably put themselves into, which is devaluation. Every empire has done it. Every empire has done it. They've devalued themselves to get out of their debt. Rome has done it. China had to do it multiple times. UK did it. Who else? China has done it multiple times through their history, actually. So Netherlands did it. The Dutch did it as well. So you just go through history. Now I can't recall through the top of my head, of course, because these are readings I've done like over years. But of course, they all do it the same way. You just have to navigate through the storm, and you will be successful. That's all. Devaluing solves their problems because they have to pay back less. In real terms, they have to pay back less because they are in debt, right? They are the ones in debt. Like, let's say you have a student loan and your student loan is $50,000. That's today, okay? That's in today's dollar value term, $50,000. But if you have to pay it back only in 20 years, what is $50,000 worth in 20 years? Sherry D asks, wouldn't an increase in taxes cause a reduction in inflation? Yes. So that's a double whammy though, right? So the government directly benefits from inflation because they get to collect more taxes, but when they increase taxes, that reduces buying power, and that ends up, it's called Laffer's curve. It's an economic concept I don't want to get into too deeply, but there's a sweet spot between the government being able to extract the most money from people and the tax rate that they set, right? So if they increase tax rates too much, that could actually reduce inflation, but that in turn, what does that mean, guys? If inflation decreases, it essentially is going to, if it decreases too much and we go into a depression, that actually reduces government earnings, right? So they don't want that either. They want to actually inflate their debt away. They want to be able to extract, they want to create inflation in the market so that they can get more tax money, get more revenue from the people. Because when inflation goes up, they get to tax more, and then they get to essentially use that tax money to pay off their debt that is essentially inflated away because that debt is losing its purchasing power. You see the cycle? Okay, I'm gonna take a quick washroom break, guys. I've been talking for an hour and a half. Be right back. Let's see, do I have a be right back overlay? Intermission? Is that it? All right, be right back.
Ain't no sunshine where she's gone. Looking in your eyes, I can't believe. I don't need to know the truth, no. Baby, keep it to yourself. I don't wanna know if you're playing me. Keep it on the low, 'cause my heart can't take it anymore. If you're creeping, please don't let it show. Oh, baby, I don't wanna know. Did she touch you better than me? Did she watch you fall asleep? Did you show her all the things that you used to do to me? If we're better off that way, baby, all I gotta say, if you're gonna do your thing, baby, don't come back to me. Ooh, ooh, baby, don't come back to me. No. I don't wanna know if you're playing me. Keep it on the low, because my heart can't take it anymore. If you're creep, keep it on the low. Oh, baby, I don't wanna
Alrighty, I am back. Wow, bowl of chips and nuts. So Jason, I hope you see why relying on a 1-year time horizon is kind of tight based on our conversation. Wow. I'm referring to our PM conversation. Yeah, I think cycles are going to be shorter. Bull markets and bear markets are going to be shorter. I've been saying that for years though. Let's see, did I miss anything? Elena says, can you explain how this relates to the mango way? How is this advantageous? How is this our edge? I'm just waking up. Because think about it, Lena, what is the mango way really all about at the end of the day? We take a bigger picture idea and we focus on positioning, right? We want to position ourselves in the big ideas and very, very gradually and slowly move with those ideas. And then suddenly we get those impulsive moves that could change your life. If you're constantly letting the lower time frame noise dictate your actions, that's not mango, right? That's not mango at all. You'll miss out on the bigger picture. And the bigger picture over here is that the Fed is going to devalue over the next 10 years. Maybe sooner. It may happen sooner. I was talking to Jason about this too. It could happen sooner, right? And if it does happen sooner, great. Great for all of us. But if you position yourself in a way where you are relying on them to do it sooner, you're positioning yourself in a high risk position, a stress position that is not mango. If you position yourself in a way where you're like, you know what, let this happen over 5 years, 10 years. I'm patient. I just got to make sure I don't get knocked out of the game over the next 5 to 10 years, right? Because if you think about it, all you have to do is position yourself for value to be transferred to you. Right? Krisha had a really good answer where she says, once you understand how money works, etc., it gets a lot easier. And once you understand how money works, you begin to understand that value is never really destroyed, right? They say value destruction, like you'll hear in Bloomberg and CNBC, so and so, like you're probably hearing it, or when you read these books too, right? You're going to hear about how the 2008 financial crisis led to a value destruction of so and so billions of dollars or millions of dollars. Household wealth was lost, etc. Value is never lost or destroyed ever. It's only transferred from one place to another, and that's how money flows around the markets as well. When people sell, somebody else is firstly probably making a lot of money from selling. And two, they're taking that money and allocating it elsewhere, right? So similarly, when the dollar is losing its value, that value is going to get allocated elsewhere. Period. You just got to position yourself. Okay, position yourself for that value to come to you while the rest of the world makes the mistake of getting sucked into the noise. That's it. That's it. It's hard to do through the emotions, but that's your edge, Lena. That is your edge. That is your edge. Sitting on your ass over the next 10 years, positioning well and doing nothing. That's it. I was telling Krishan this too, right? That's all we have to do. We have to do very, very little now, and it will come. You just got to not fuck up. Don't fuck up, and you will make it. That's it. That's fucking it. I don't use those terms often, so listen well. Just like energy, says Mock. Just like energy, says Mock. And if Sherwin is still here, he's going to draw parallels. Because money is effing energy. Money is energy. At its core, money is energy. And if energy cannot be destroyed, okay, conservation of energy, guys. If energy cannot be destroyed, and money is energy. Money is energy. Understand that. Money is energy. Okay? Energy can't be destroyed. So you just got to position yourself for that energy to come towards you. Sherwin is still here. I'm glad to see. machine greens. Oh, this is that documentary on this. That was a bad documentary. Eh? It was okay. I think Krisha liked it and told you guys about it. I wasn't a big fan of it, to be honest. It was okay. So John, you have no Bitcoin whatsoever, man? Is that so much pain on SLP? Holy shit! Oh my god, what the F is this? Oh my god. Oh my god. Oh my god. Jesus. Alright, look at this. Good. Krisha, could you come in here and change the time frame? Oh, I mean, not the time frame. Like, do something. Oh my god, that was freaking bad, man. Can't even look at that shit. What are you guys doing in those kind of assets, man? I mean, I'm gonna pay the price for that. Bitcoin's gonna look just like that, eh? Oh my god. You know how Bitcoin fails, guys? You know how Bitcoin fails? If the Fed decides to do the right thing and that Bitcoin is going to freaking zero. If the Fed starts saying, you know what, we're no longer printing money. We're gonna take the pain. We're gonna go into a massive long-term depression. Everything's gonna crash. It's okay. It's okay. If the Fed says that and they actually pull, they see through end to end, or the next, like, we go through a 10-year depression, that's the only situation that the Fed fails, where they let the entire world go to shit. The entire world will go to shit, and Bitcoin will fail. That's the bet. That's literally the bet right now. The world goes to shit and Bitcoin fails, but the dollar will be amazing, and America will be great again, and China will be great. Everything is a-okay. Then 15-20 years ago, our generation is left. We're like screwed, and the boomers are screwed as well because they get no pension money, nothing, everything goes to crap. But yeah, at least the next generations are saved, right? Your kids will be a-okay, because right now that's who I'm concerned for. Yeah, having zero Bitcoin is so Bitcoin is your insurance policy. That's what Bitcoin is. It's your insurance policy against the world going to shit. If the world doesn't go to shit, right, and everything's okay, right, well, your insurance policy is useless. Just like having car insurance, right? If you don't crash your car insurance is useless, right? But you still have car insurance. I hope you guys do, at least. So same story with Bitcoin. Have some Bitcoin as insurance. Even if you guys are all, like, hardcore into crypto, right? Have all these altcoins. Have some Bitcoin as insurance policy. Believe me, I know the pain of having no Bitcoin. Believe me, I was in your shoes. You guys think you're special? You guys think I haven't been there? No, I've been there. I've been everywhere. Everything that you guys have done, and you guys think I'm a boomer for crypto. I've done it, man. I've done it all. I have no BTC. I think BTC will be overtaken in market cap by ETH. Okay, so if you think that, that's fine, but that's not a reason to not have BTC. That's fine. But I'm not going to sit here and argue with you on that. Whether it's true or not is irrelevant. And who cares if it does? It doesn't change the reason to have Bitcoin. Like if you actually think you are a trader, a real trader, and you want to actually be good at this game, understand that. Understand that that's irrelevant to how you construct a trading plan based on how assets are moving, how money is flowing through assets right now, right? I think Bitcoin is going to flip real estate. I effing have a home that I own. I have 2 homes that I own. I could have, just think about it through that way. What if I'm wrong, right? What if I'm wrong on Bitcoin and interest rates just keep going up, blah, blah, blah. You always have to allow for the idea that you could be wrong. Always allow for that idea. I love Lynn. She is amazing. Lynn Alden is oh my god. Like Krisha thinks I have a crush on her. I think Lynn Alden and Michael Saylor are the only 2 people who truly impressed me in the macro space. There you go. For the same reason that you have silver, right? That's what Bitcoin is. You can't compare Bitcoin to a crypto asset anymore. Remove it out of that category in your head. But silver will perform well in a different scenario that Bitcoin will perform well, right? And similar with gold, man. Like it's a different scenario. What I think, like for example, right now gold is probably doing well, right? Let's see. I mean, I freaking hope to God. Let's say you. What? I don't even know the ticker. Okay, not so well. Gold never does well, man. It had a massive run during the COVID thingy. So where's money flowing right now, guys? Where's money flowing? Where's all the money going? You guys saw SPY? Did you guys see what SPY is doing? SPY freaking got wrecked. If you compare what Bitcoin did compared to what SPY has done, this candle on SPY was pretty ugly, man. So where is money getting allocated? Even Dixie went down. Everything's selling off. Money market funds probably money market funds. Where's my... I don't have it here. What's Nasdaq doing? ADA surprisingly, John E. ADA surprisingly holding a key level. I've already looked at Cardano. I don't think I've looked at it on the stream though. But yeah, it's holding this level, man. So until it loses this level, if Cardano continues to hold this level while Bitcoin keeps losing its levels, that's going to be pretty impressive. So keep an eye on this, guys. Keep an eye on this. What about Raul Paul? Raul is hardworking, man. If there's anything you guys can learn from Raul is how hard he freaking works. This may sound very cocky, but there are very few people who yeah, it's gonna sound cocky no matter how I say it, so I'm just not gonna say it. But Lynn Alden and Michael Saylor are people who are a class apart. There are very few people who I look at and I'm like, damn, that person is smarter than I am. And Lynn Alden and Michael Saylor are like, Saylor's a genius, guys. Like, he's a genius of another category. I don't think the world understands it because he's able to actually speak in a very simplistic manner. He's a genius of another level, and you got to thank God for Bitcoin just to be able to be exposed to this guy's thoughts. Because if it wasn't for Bitcoin, this guy would have probably died a no-name person. Right? Just being able to hear how he thinks. Bitcoin did that alone. If Bitcoin did anything that's good in the world, it brought Saylor to the forefront and allowed him to speak to the world. Gave him a pedestal to speak on. Watching Sean eat chips is making me hungry. In your opinion, how much BTC is enough Bitcoin? Take your current wealth and 10%. That's enough for you. That's like the minimum. Sorry, enough. I don't know about enough. Enough depends on what you want from life, right? I don't know what you want from life, but the minimum amount, whatever your wealth is, 10% in my opinion needs to be in Bitcoin. Here's the thing, Tan. He does not preach maximalism. That's the thing. That's what's impressive about the. To answer Raj's question, there's no interview. There's no single interview of Saylor. What you need to do is actually go back to his first ever interview, which I think was probably with Raul Paul, right, on Real Vision, and watch him learn. Go through his journey through the rabbit hole, and you're going to see his thought process evolve. He's constantly learning and coming up with ideas on, like, during his interviews. You're going to notice I'm going to end up sounding like a freaking fanboy, which I don't want to. Very few people are worth listening to in the space. Saylor is one of them. I'm not sure if it's free. I have a Real Vision subscription, so it's not worth it. I shouldn't say this on stream, but it's not worth it. I don't use it often. I very rarely use it. Don't pay for that. I'll tell you, I mean, how about that? I don't know if it's not worth it. I don't use it. That's a better way of saying it. There's a lot of things I pay for that I should really cancel. Don't follow him on Twitter. There's no, like, I mean, follow him on Twitter. Like, give him a follow, but it pales in comparison to his thoughts on podcasts. Thoughts on ICP? It hit the target level of $40 ish and dumped. Holy shit, dumped hard. It retraced entirely. It retraced the whole way. Jesus Christ, that was fast. Yeah. Yeah, that was a target. Hit the target perfectly. So target was essentially, you see this candle here, man? That was your target. Candle close and wick. Mark that out. Hit the lower range and rejection. Now, if it breaks back underneath $28, next level is 24. Thoughts on Roger Ver? I think he was instrumental, misguided, chose the wrong path, was probably too, unlike some people who said or admitted that they were wrong and changed paths back again. He didn't do that. He stuck to his guns, and good for him. Maybe he's going to be right in the future. Who knows? So yeah, those are my thoughts. But I disagree with his ideas. I think I believe in Bitcoin, and I don't believe in Bitcoin Cash. That's what I can tell you. Roger's a passionate guy, man. Hey Winnie, how's it going, my man? Inane Clown Posse. I thought it stood for Internet Casino Plaza. Bull market support banner intact for 10k. 14k, right? We have support before that though, so let's see. 10k, is that a key level? Psychological level for sure. 11k-ish, 14k-ish, likely to be picked up there, man. Could get to 10k. I'm new to the dashboard. In your Mango dashboard, the support and resistance, are they plotted by you guys or what? No, it's plotted by the algo. It's all plotted by the algo. The developer of that algo is the particular algo on the dashboard for the support and resistance is actually Mock. So, if you have any questions for him? I'm very excited, man. Freaking finally. What do I think about Charles Hoskinson? I've never heard him speak, man. I have no idea. What's the insurance against the bear market in your view? You put on I put on a strangle trade. So, oh yeah, someone was asking me how do I put on my substance. You just essentially put on a strangle, right? So you can long volatility. That's what I've done. And if Bitcoin actually dumps, I'll make far more Bitcoin than if actually Bitcoin pumps. But I lose Bitcoin if Bitcoin goes sideways, right? So that's kind of how I've constructed the trade, where if Bitcoin moves towards the upside, I make some Bitcoin, good Bitcoin, but not great Bitcoin. If Bitcoin moves towards the downside, though, I make really good Bitcoin. So that's my hedge. But if Bitcoin goes sideways, that's when I lose money, right? So if Bitcoin goes up, I don't need to. That's not. It's just a nice to have that I'm making some Bitcoin, but I'm heavily exposed to Bitcoin, right? So I don't need to make Bitcoin if Bitcoin's going up in price. Bitcoin goes down though, well, this will cover a good chunk of USD losses. So that's the hedge. But I lose money this way. Which time frame do I receive? Do I prefer to receive alerts from the dashboard? I use the weekly and the 2-day in combination, and then I look towards what the daily and the lower time frames are saying. The 4 days are something I don't use because I'm always looking at the charts, right? I don't want to set too many alerts, but I'm always looking at the charts, and I start with the 4-day. So like it's a habit. So. Sean, you gotta scream bull market support band. I don't want to keep on that theme because I've not really, like someone pointed out that I've not really watched the guy's videos to actually even know whether I know I probably am, like, how about this? I've not watched the guy's videos to know whether the people who are relaying the information to me are misinforming me or not, right? So maybe I'm misinformed. Maybe I don't know anything. Did anyone see the diabolical article in The Guardian last week proposing price controls to combat inflation? What the hell? Price controls leads to inflation. Price controls lead to inflation, period. Any sort of intervention whatsoever from the government on anything always leads to inflation somewhere or the other, period. You need to let the free market do its thing. Raja, what do you mean by my futures trading strategy? I don't really understand what you mean by that. I trade futures like I trade anything else. So you know futures is essentially a way for you to have more liquidity and be more efficient with your liquidity. That's the key reason you use the futures markets. Exactly, Tan. Yeah, exactly. You use futures to hedge, to be, again, because let's say I have Bitcoin stored in my my hardware wallet, and for me to be able to send it over to a exchange and then sell and blah blah blah, all going through all of that freaking pain, I can just use the futures markets, right? Boom. There's so many things you can do with futures. It just makes markets more efficient, period. So for example, I can take, if I want to sell 10 Bitcoin, instead of keeping 10 Bitcoin on the exchange at all times in preparation to sell, I can keep 1 Bitcoin on my debit account and take a 10x leverage and sell 10 Bitcoin, right? And then in the meantime, in the interim, I can take my sweet time, allowing the funds to move through the blockchain, etc., get confirmations, and then reach the exchange after being approved, blah, 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 and then sell it if I want to. Right, you can also use one contract against another, like you can use your perps against your March contracts, for example. So if you're long the perps and you want to keep your position size, but you don't want to really get out of your position, really, you don't lose, sorry, not position size, you want to keep your entry, right? You want to keep your position, but you don't want to have complete exposure, you can hedge some of your position. You can hedge some of your position by selling, like, let's say 25% of the contract on 25% of your position on a different contract, on the March contracts, and boom, that's something else you can do. Now again, this is more like vanity. It doesn't really matter in the long run, other than trading the contango and the backwardation, of course. But we are assuming that there's no contango, no backwardation over here, just for pure hedging purposes, to reduce exposure while holding on to your entry position. Now this does help, okay? People saying that, oh yeah, it doesn't really matter in the long run, they're right, but at the same time, psychologically, anything that helps you in the markets also helps. I don't understand futures, not ready for that. I feel like options is a good market for me to try. A lot of people have been saying that they prefer learning options over futures. That is so interesting. And they've been asking me to create an options course, but I've been hesitant. But maybe I've been wrong on that. I really thought that there wouldn't be enough demand for me to warrant putting in the time to create an entire options course. But I really may be wrong on that. So if Elena's saying that she's interested, I'd really like to see how many actually, if there are at least 20 seedlings who'd actually really want to learn options, right? I'd be down to put in the time to create a seed like course on options, and understand that I put in a lot of effort and time and energy into seed. So I don't want to take this undertaking lightly. Like, I started it and I realized that, damn, this is, yeah. Whoa, that's a heavy question, man. What would be my advice to a young person? As what though? In life or just as a trader? Yeah, at 20 only, man. I thought that we wouldn't even have like 10 or 15, to be honest. It's not going to be included in seed, Elena. I can't do that. It's going to be an entire course. It's too much of an undertaking. It's going to be a separate course. There's too much opportunity cost for me too, in regards to like making content versus trading the markets, etc., etc. My own growth. Okay. Let's get back to Raj's question, because this one actually stumped me. If someone's 20 and just exiting college, if you asked me if someone was entering their college years, I would say drop out. That would be my initial, that would be my immediate response. Now it's scary to do that, and especially easier said than done. And especially coming from a guy like me who's an academic. I went through my entire education. I was going to do my PhD. I was so close to doing my PhD. It was my professor who introduced me to Bitcoin, actually, funnily enough. So I really think that the best thing you could do is but that's not what you're asking, but I'll say it for anybody else listening at home anyways, is be ahead of the game and understand that the current education system, the way it's structured right now, it's on its way out. Within 10 years, I think you're not going to see too many employers requiring that employees have a full university degree. You could have these mini courses or mini degrees, they're called, right? Micro degrees, and pile them up on your resume. If I had to go back in time, I would just instead create a GitHub of all my my ability, right? Basically showcase my ability on GitHub instead of like going through university to show employers. I can't even say employers anymore. That's how long I've been out of the job scene. I don't know the difference between employees and employers. But yeah, that would be my advice to people just entering their college years, is that don't bother going to debt. Understand this, okay? Understand this. I'm gonna draw it out over here. Getting an education in the 1970s and getting an education in 2020 is far different, primarily because of money printing, the quintillion effect, etc., etc. In 1970s, debt was inflated away through the 1940s all the way to 1970s. There was 30 years of the Fed doing what it's trying to do at the moment, where it was inflating its debt away by printing money and getting out of its situation. And costs were in general low. Everything was low. Getting an education in 1970s was cheap, was very, very cheap compared to getting an education in 2020. Then all the money printing started. We got off the gold standard. Okay, we got off the gold standard with the Nixon shock and the fiat standard. The whole world was pegged to the fiat standard. Money printing kept going up, and with that money printing, right, costs of education kept going up and 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 up. So you are literally buying an education that is still living in the 1970s, right? This is an education base of the 1970s and further back, because this was an education system created for the boomers. It was literally an education system created for them, which is great. Okay, the world was about them when we came off World War II, etc., etc. We built a world for them, and now we are at the tail end of that world. So you are literally buying the top of the education system, in my opinion. And we all did it. Those of us who did, we made that mistake. But now, I got scholarships, etc., etc., etc. But I also wasted a lot of my time. I asked myself, what if I hadn't gone through my education system and I kept doing what I was doing, what I liked doing? I would have most likely ended up somehow in the crypto world a lot earlier than I did. I like to think that to myself, but who knows, right? Who knows? You don't know what's going to happen. But either way, that wasn't what Raja's question is. But I don't know, man. Somebody coming out of college, I would say right now, you don't even want to get a job, man. Because if you get a job, like if you've finished a degree and you get a job, it's the same story. If it's the same story as here, but the opposite. Now, how do I say that to people? How do I say don't get a job, just be poor, right? What I can say is that it's not in your best interest to focus on your job at the very least, because wages are really, really down. Wages are really, really down because the cost of money has lost all of its purchasing power, right? Money has lost its value, right? While wages have not gone up since 1970s. Wages have not gone up at all, okay? So wages have not gone up while money has depreciated drastically. Okay, so what you are earning right now, if you actually look at I'm not sure about the stats for America, but if you look at the stats for Canada, people are earning today, right? The median wage is actually far lower than the median wage in 1976. Just think about that, okay? While costs are through the roof. If you do inflation adjusted, purchasing power parity adjusted wages, you're going to see that wages have actually gone down while costs have gone up of everything. So it's on your best and working hours have increased. So it's on your best interest to be a worker either. So I remember when I was fighting this dilemma, I'd asked myself, what's my way out of this freaking hellhole? And the answer is, if you are forced to get a job, okay, you make sure that you work in a way. How do I say this, man, without like okay, you have to work in a way to meet the bare minimum that your boss approves, okay, while freeing up free time within your job to work on your future growth, whether that be your own assets, or whether that be passive income, whether that be your education. For example, what I did when I was a janitor, for those of you who don't know, by the way, I was a janitor. Read my story, right? Type on Google Sean Dexter janitor to master's degree and 6-figure salary, etc. What I did when I was working as a janitor, night shift, I would do my job really super fast, efficiently, do it well, and then I'd go to the washroom, and I had my calculus textbooks with me, right? Because I was taking additional classes, etc. And then I eventually got fired because my boss caught me twice in the cubicle with my textbooks on my lap while sitting on a freaking commode. So I was doing all of this to get ahead in life. So that would be, you guys don't have to. You guys won't or aren't in as bad of a position as I was in my life. So, etc. Please, no filter. I have to give filters, man, in this current day and age. Samwise, Sean, you are literally describing my life over the last 4 years. That's incredible, man, Sam. Like, that's good for you, buddy. Good for you. I'm glad to hear that you're pushing. If you ever want to PM me and talk about it, you're free to do so, bud. Don't hesitate. Julian just linked my story. Thank you, Julian. Thank you, Julian. I should update that. But any update to that now is going to seem a bit pretentious, so. Yeah, exactly, Tan. Exactly. They were just taking in anyone. You did not need a freaking master's degree just to get approved or considered for a what's it called, starting job or beginner's job or whatever it's called these days, right? So yeah, you did not need that. You could just freaking go and apply, and they'd take you in with open arms as long as you could freaking speak the language correctly. There's so much opportunity. Like when you read the historic textbooks and you read how people got their jobs, just like that's nuts, right? Like read the stories of like some of the greatest traders of today's age or today's day. They're going to tell you about how, hey, I was a clerk over here, I was a clerk over there, blah blah blah. Like how do you get those positions now? Now you need an MBA to just get those freaking starting positions. These guys were like high school dropouts. There was so much opportunity, and you know where our opportunity is? Our opportunity is over here in the crypto market. Jeez, how long has this stream been going on for? Can someone tell me? It's been a long stream. 2 hours and 2.5 hours, okay. We'll probably stop in around 7 minutes. Thank you, Pushpendra Kumar. Appreciate that. Sure, Zelina. I'm glad you showed up for the stream as well. It's always good to have you here. When wages are going down, time is your best asset. Well said. I like that. I mean, time is your best asset at all times, but you can kind of look at wages and time the way you look at the bond market and interest rates, right? So if wages keep going down, right, you start valuing your time way more. I like that. I like that, Sam. Right. So this is the scissor between time and wages, right? It's similar with the bond market, right, where you have yields go up when the bonds are going down, right? So over here you have time. Your time is valued more when wages are going down. So if you're getting paid shit, inflation adjusted especially, your time is more important. Like, what you want to start doing at that point is start building in revenue that comes in for your long-term success, or start building in the skills that comes in for your long-term success. Stanton Suklai says, I must say you are a great teacher. Thank you so much for that, man. That means a lot to me. I've learned so much from your live streams. Keep it up. Hey, man, appreciate that. Appreciate that. All right, so final thoughts on Bitcoin. I'm going to go ahead and remove all these drawings over here. What I did not discuss, which I was meaning to discuss actually, was that we do have a bear flag over here. Now it depends on how you draw it. You can take the wick, or you could take the can closes. We have broken down, and this is pointing to somewhere around these wick lows over here. So I wouldn't be too surprised. If we do see a capitulation event that happens quicker than people expect, where we actually come target these wick lows over here. Okay. Yeah, I like that. Wow, that actually lines up with a liquidity hunt perfectly. So if you do see that, keep an eye out for maybe even Krisha's level of around 25,000 getting tapped. Who knows? It doesn't need to happen immediately. Another scenario where this could happen is if the weekly 200 moving average actually moves up, and this happens after a while. So let's say the weekly 200 moving average actually... Some people are probably thinking, finally he's doing some TA. The weekly 200 moving average actually comes up over here, leading into Krisha's birthday. And then we see a dump again on Krisha's birthday, where we consolidate for a bit, put in lower highs, and boom, close above. Bear market over. Lead into 2023. Going sideways, testing. Get ready for some boring. And then 2024, guys. Wait. That doesn't make sense. 2024 is the when exactly is the 2024 halving? Is it the beginning of the year or the end of the year? That's gonna you can like kind of backtrack that way, right? When I started working full-time, I started pricing things in time, and it gave me a much more realistic idea of the cost of things. Yeah, another way to do it is ask yourself, how long would you have to work to be able to pay off the shackles that society places upon you by forcing you into debt slavery? How long will it actually take you to achieve those goals? How long will it actually take you to retire? Ask yourself all those questions, and then ask yourself where you want to allocate your time. I think it's early 2024. Okay, so it's April 2024, eh? So let's have some fun. Here, and that doesn't seem too long. Doesn't seem too far away, right? Doesn't seem too far away. What are the paths that we could take towards that, right? When was the last halving, guys? When was the last halving? Could someone give me the number? Somewhere around here, right? May Okay, that's good enough. I guess it was a prior week. Okay. So we dumped into, wow, if you look at this in hindsight, it was like a gift, eh? You dumped into the weekly 200 moving average, leading into the halving, and then rallied into the halving, and this kept going, right? So, delete all of this. How do you guys see this playing out? Let's say we forecast this way, considering Bitcoin goes sideways, decrease the slope a tad bit. Do you see it this way? I'm finding it hard to see it this way. I'm not seeing it. I'm not seeing it, guys. You know what makes more sense? Maybe if we lose a Kijun. Weekly 21. Yeah. Wait, this is 900,000. Holy shit, wait. Relax, Sean. 400,000. That seems reasonable. You guys get the idea though. The number doesn't matter. The number doesn't matter. Don't pay too much attention to the number. There's got to be a better way to do this. Jesus Christ. This makes a little bit more sense. Something like this. If I was drawing with my yellow lines, Raj, which I should have done it that way, I would have been a lot better. I don't know why I did this stupid freaking trend line nonsense. Didn't work out. The polygon tool, where do I find that, Winnie? Is this it? Oh my god! Okay. Okay. Wait, where'd it go? I have to learn how to use this. Yeah, I've been trading only for 5 years. I didn't know about this too. How do I keep it? Okay, double click. The path tool. Where do I find that? You guys are teaching me here. You see, I'm too mango, man. What is going on? When did these things get added? Oh my god, I feel so stupid. It's not mango without the scribbles though. Freaking nonsense. Oh yeah, Kushan, I have to go out on a date today. Date night and stream night are going to be the same day, by the way. What do you guys think about every Thursdays we do a stream? Alina, this isn't early, this is late. You're living on the wrong side of the world, Alina. You gotta move. Stream the date night. Like my mom would say, that's all that's left. So what do I do, dude? Earlier, here's the thing. I gotta ensure that it's. I gotta find a timing that is good for everyone. And the way I've constructed it right now is that I want to make sure that Sherwin and Julian are on the stream because they are the most regular on the streams and they're the most. They talk the most, etc., etc. So that's why I do it around these times. Just to be honest with you guys. And yeah, it's good to have Mock around as well. But he's not that important. Yeah, Elena, move out to the east side of the world. That's what I did. I moved back to the east side of the world. There you go, and it works out for the AU folk as well, right? Australians. It's not too late for you, right, Sherry? There's favoritism. The more you guys engage, the less lonely I am on stream, right? So of course there's going to be favoritism, and Tan as well. Tan's always here. I got to diss the developer, dude. You got to keep the developers in check. Especially a guy like Mock. This guy's too smart for his own good. Yeah, exactly. He said it himself. Gotta keep Mock's ego in check. I'm kidding. Mock is awesome. Alright, Raj. See you, man. I'm gonna head out too. Oh, Krisha's gonna give me the stink eye. I hope you guys enjoyed today's stream. I'll see you guys next week. Today was a blast. Unfortunately, Bitcoin blasted down through some key support levels. Let's see what we have panned out for the next week. Definitely going to be an interesting year, full of opportunity nonetheless. Any volatility is opportunity, guys. Any volatility. It was good to have all of you in here. Thank you for joining us. Sherwin, Mock, Julian, Elena, Dipesh, Raja. Thank you for all the great questions, man. Really good questions today. And yeah, I'm probably forgetting a few names. Who else? Tan. How could I forget Tan? Tan, the man. Boss, thank you, Tan. Tan has come a long way, by the way, in his fundamental learnings over the last year since I've known him. So Tan has definitely been reading in his spare time. Good to see that, Tan. Good to see that. And yeah, for Jason, I'm not sure if you're still here or if you've fallen asleep, bud. But it was great having you as well. I'll see you guys all next week. In the meantime, make sure you guys join the Discord. And yeah, themangoway.com/Discord. My name is Sean Dexter, and I'll see you